This is the Fibonacci retracement tool. Yeah, you probably have heard of it. And unfortunately, most traders use the Fibonacci tool completely wrong. I am going to show you how to use it correctly and give you an amazing strategy using it. These strategies will give you sniper entries with strict stop losses and huge targets. Then for the last part, I will give you a secret hack that will completely change the way you trade with Fibonacci forever. So basically, after this video, you will be a Fibonacci pro. So, to start us off, we have to go over how the market moves. To put it extremely simple, the market will make a move like this. A move with a big trend upwards, a retracement, and then continue process, making this point a beautiful entry. Our goal with the Fibonacci retracement tools is to predict the end of this pullback point as accurate as possible, so we can enter here and benefit from the move upwards with as little risk as possible. Now, there is a lot of controversy on what Fibonacci levels are the best. Lots of traders use different levels, but for my testing and these specific strategies, the most optimal Fibonacci levels are 0, 0.382, 0.5, 0.618, and 1, giving you something that looks like this, but for the cherry on the cake. These three levels are the most important and what I call the sweet zone. This zone is where the price is most likely to take support and give a pullback. Now, one of the biggest mistakes traders have when using the Fibonacci tool is not knowing where to have the starting point and the ending point of the Fibonacci. And this can cause a lot of problems because if you use the wrong starting point and the wrong ending point, you will get some bad losing trades. For example, this chart. A lot of traders would get confused. Do you put it here? Do you put it here? Where do you put it? So, here's a quick and simple way to know exactly where to put the Fibonacci, so you get the perfect starting and ending point every time. First, go to the Indicators tab and type in Fractals. Click this one right here. Your chart will look something like this. This indicator will show us high probability reversal points. The green arrows are bullish fractals. The red arrows are bearish fractals. But as you can see, there are a lot of fractals. And we want to lower the sensitivity of this indicator so we only see the major reversal. To do that, go to the settings of the indicator and change the periods to 10. Now we filtered out only the strong swing points, but as you can see, the indicator is still giving us some irrelevant swing points. So sometimes you are going to have to do your own due diligence and only look for the strong moves. For example, you should not use these two fractals here because they are very close together and it is a very weak trend. It is very important we only use the Fibonacci on strong trends. If you use it on weak trends, it won't work as much. Once you find a strong trend like this, grab your Fibonacci tool and mark it from the recent high fractal to the green fractal. As you can see, price came to the sweet zone. We enter and price hits our take profit with ease. Just this alone will work alright, but we're going to add some more with this to make it perform even more amazing. Okay, so what I found works really good is pairing this with support and resistances, specifically retests. Here's what I mean. So here we found a strong trend. We see our two fractals, we get our Fibonacci tool, and mark the high and low. But if we look a little bit closer, something interesting is happening. We have a strong resistance level right here, and price broke right through it, meaning it can now be used as a support, or in other words, a retest. If you look even closer, this retest level is exactly where the sweet zone is, adding even more confidence to this strategy. But wait, there's more. To do this, go to your Indicators tab and add an EMA. Go to the settings and change the length to 200. A 200 EMA on a large time frame is going to act as a very strong support and resistance. For example, in this uptrend, you can see price use this EMA as a support and bounce off of it many times. Then in this downtrend, you can see price use the EMA as a resistance and again bounced off many times. So, these things all put together makes our trades have an extremely high probability of winning, and we have the best chance at finding the exact retracement point like we were talking about in the beginning of the video. Thanks for watching. If you like and share if you learned something valuable.